Hey, good morning, everybody. Good to be with you here this morning. It is Wednesday. We've got a USDA report out today at 11 o'clock. In the equity markets, we have CPI numbers out. If you like markets, today is your day. We got all kinds of data coming out. Did catch a little bit of rain here in Wisconsin overnight. Not sure that it's going to be enough. I've only mowed my lawn 3 times so far this year. Um, Driving my wife crazy. We don't have that 30 minutes away from each other while I'm out cutting the grass. So uh, it's been a dry year for us. Let's get into the grain markets here this morning. December corn up a penny and 3/4 at 503 1/4. We've got November beans up 12 this morning at 1372 1/4. Wheat's up a penny. Equities are up slightly. Like I said, there is a CPI number out at 7:30. Expectations are for the CPI numbers to decrease slightly compared to last month. Crude oil slightly higher this morning as well. And like I said, we have the USDA report out at 11 o'clock Central, and we will have a video update. We likely will for our report subscribers um, post report on that. Real quick, too, Wednesdays, I like to talk a little bit about mindset. I've been watching a lot of trading videos lately. I typically watch them, but I saw another guy make a really good point. You cannot maximize profits and maximize downside protection at the same time. You can only do one or the other. You can't maximize gains and limit risk. So keep that in mind as you're setting your marketing plan. It's a little different for everybody. Some guys like a little more risk than others, but there's always a trade-off. There's always opportunity cost. So get to know yourself. Get to know an advisor that you'd like to work with that can help you achieve those goals or work within those goals. But like I said, the ultimate point here is that you cannot have both. You cannot have maximum gains with maximum risk protection. Let's get into global prices here real quick on the corn side of things. Really kind of competitive across the board. I think that's probably a good sign for the U.S. We should be picking up some exports in here. Not really sure where the Brazil November number is coming in that much lower. So again, we're fairly competitive here on the world market. It's good to see. Soybeans, again, this one's been one to watch. Brazil's kind of slipped in here for the October month. I don't know what's going on in September. 492 seems awfully low. October, though, seems normal. November, again, I think that's kind of an outlier. So a little bit of back and forth, something to watch as the U.S. tries to get competitive here on beans. Wheat side of things, go to the Black Sea. This is the same thing every week here right now. So here we go. Let's look at report estimates. Corn, the trade's projecting a 176 estimate here. The June number was 181.5. Beans, we're looking at a 51.4. The June yield was 52. Typically, and we've said this before, you don't see a yield change on the July report. It can happen. It's just not typical. So this report's going to be, we should see some volatility for that reason alone. U.S. ending stocks right there, the projection is 2.26, not a lot changed compared to June. Soybeans will be obviously the big one to watch, and that a lot has to do with the acreage number coming in lower. You see the projection there at 199 million bushels compared to 350. Real quick look at the weather maps. Here's your GFS. Fairly good rain here. Called for rain over the next 7 days into the 19th. Euro model essentially in agreement. You could argue that maybe a little more rain for like Illinois. So pretty good agreement. We should see some decent rains here in the next 7 days. Corn chart. This is the only chart that I got here today for you guys. We've talked about this massive sell-off coming down. We've got a 50-day moving average up here at that pink line. We've got a 100-day up at the white. You can see those green lines. That's a retracement from the very top of the move to the recent lows. That yellow-orange box, if you will, is kind of the area I would say that's a reasonable target to have in here between 530 and 550 if this corn market's going to come up. Again, I think you guys, it's good to set expectations. We talked last on Monday about the bean chart that looked a little more bullish. Again, this chart currently is not bullish by any stretch of the imagination. So if we get a rally, I think that's a fair expectation to have unless we have some significant material changes in here. So again, just keep that in mind. And along with those expectations, like I mentioned, figure out if you're a maximum risk taker or if you're more of a conservative person, and then match that to these expectations. You can't have both, unfortunately. So guys, we hope you enjoy the content. Hit the thumbs up button. We really appreciate it. Subscribe if you're not a subscriber, and check out in the link below if you'd like a 2-week trial to our report. We send that out daily. We have text alerts included with that whenever we're making a sales recommendation. We've been very active hedging this year, especially with the volatility out there. I think we've been doing a good job. So if you're not currently signed up for that, check it out. We'll send it out to you for a couple weeks. Hey, let's get a little bit better today, and we will see you guys here with a post-report update.